We're about £1 billion and we've housed 10,000 people. Over Christmas, there were 2,000 people, Christmas, New Year, sleeping rough in the borough of Westminster alone. So we said, well, in 3 years, can we create 2,000 new homes for people in London and call it Project Westminster? He told me that you could buy a house in Greater Manchester for 50 grand and there was a charity who would lease the property from you and manage it for you. And they were kind of quoting at the time that you could receive something around about, call it 10 to 15,000 pounds a year.
So you could get your money back in 3 years.
Yeah, and imagine if you put a bit of debt on that, then suddenly your returns were great.
Guy, welcome to the People Property Place podcast.
Hi Matt, good to see you. Thanks for having me.
Not at all. Well, thanks so much for coming in. Really keen to unpack a little bit about your background story, and specifically HSPG and how you set the business up, and what that looks like today. But before we get there, a question that I always ask people who come on the podcast is, how and why did you get into real estate?
So I fell into it. I decided I didn't want to go and work in the big city. I spent a bit of time in sales and trading as an intern and realised quite quickly that being at the bottom of the ladder, like a year 7 at school again, wasn't for me. So I thought, let's go and explore what else I can be doing. I wanted to do something that involved relationships and numbers. And I met an old school friend whilst I was kind of hunting around, looking for the right thing for me and just looking to get ideas. Anyway, he told me that he was exploring an opportunity to invest in cheap housing across Greater Manchester. And I was like, okay, this sounds interesting. He was always a nice creative guy, so we spoke a little bit more about it. He told me that you could buy a house in Greater Manchester for 50 grand and there was a charity who would lease the property from you and manage it for you. They would take care of the residents and they would pay you directly from the local authority. The cash would come straight to you. All you need to do is deliver the property. The charity would take care of it and they would deal with all the individuals in there. And they were kind of quoting at the time that you could receive something around about, call it 10 to 15,000 pounds a year. So I was like,
Against a £50,000 property?
Yeah, in Greater Manchester.
So you could get your money back in 3 years.
Yeah, and imagine if you put a bit of debt on that, then suddenly your returns were great. So I was like, that seems really interesting. So I went home and I mocked up a bit of a model on Excel. And I looked at the numbers and I was like, I didn't know anything about property, but I knew that if I could get my money back in 2 or 3 years, like this was a great opportunity. So I started going around speaking to people who were in the space and in the sector, and asking them what their opinion was of this idea. And they're like, yeah, it's kind of cool. I think I like it, but, will it work in practice? Will you actually get your money? Will there be any problems? Will they smash up the house? And these were all really, really valid questions. And I soon realized actually the big thing was the security of the income and the security of the property, making sure it was well looked after. So whilst we had a nice model, no one was really interested in biting. And during this time, the guy who I was exploring it with, his dad thought it'd be better if he rejoined the family business. So in that time, I then explored working with my now business partner. And whilst we were looking into it more, I was at a property conference and I was really excited to speak to this one guy. And he was the speaker at the event. And whilst I was waiting to speak with him, there was a lady who I came to know as, I think Jane, actually, if my memory serves me correctly, was speaking to him, and she had a lanyard. She was very professional, and she was asking all of these questions about his properties and then basically talking at him about this amazing service that she offers, where she housed asylum seekers across Greater Manchester. She offers a 5-year contract, rent guarantee. They look after the property. They look after the buildings. So they manage, they maintain the property. They offer a 5-year lease, and they pay the rent directly. Oh, and they're a PLC. So whilst I'm waiting to speak to him, I'm hearing all this information from her, and I was listening to try and react to something that she was saying so I could speak to the main guy. But as she's speaking, I can hear all this beautiful words of wisdom, and I'm like, hey, I need that, exactly what I'm looking for in my properties. It was the management side that I was, so kind of keenly missing. And that's when we did our first property that we housed asylum seekers ultimately with Serco. They just won the contract. So yeah, we started by doing one property, and then suddenly the issue of not having a reliable tenant and not having reliable income and someone not being looked after who would smash up the property all went away, and suddenly we had people who were interested in funding our properties.
Before we take the story on further from there, can we just rewind a little bit? Because if I'm not mistaken, you went to school in Manchester and then you went and did mathematics at Nottingham, right?
Yes.
So no parents, family, connections to real estate at all.
Correct.
You just thought you'd go down a kind of a more banking or finance level route, and actually maths was a good degree to get to kind of get you into that world.
Yeah, exactly. My mum had done up one or two properties, but I'd never had exposure to real estate really before. I understood numbers, studying maths helped. It was purely done from a perspective of how could I give myself the best opportunity to do whatever I wanted when I left university. So what I was thinking was, if I study maths, then that will give me the best chance to go and get me into wherever I needed to go next. So yeah, and then ultimately that was then a job, summer internship, a spring week, and then a summer internship at RBS and sales and trading, debt capital markets. Realized I didn't like that, and then was like, okay, well, what can I do that is maybe a little bit more entrepreneurial? I thought about private wealth. I thought about maybe my interest in sports and bringing that in with private wealth would be really interesting, relationships and managing money, which actually is what piqued my interest in property. Because I was like, if I'm going to go into private wealth, maybe I should learn a little bit about property. So when this guy started telling me a bit about it, I was like, oh, you know what? Let's see how this goes. Worst case is I just learn a little bit, for 6 months, because I kind of had a job semi-lined up down in London, actually, for 6 months later. So I was like, well, let's see how this goes. I'll learn a bit about property, and I'll be able to use that experience in property and be able to advise clients, further down the line. And it's just collecting little nuggets of information, essentially.
As a kid growing up, what kind of kid were you?
Cheeky, fun, sporty, very sociable, always out. Love playing FIFA, Football Manager, a bit of an entrepreneur. So I used to buy and sell stuff online. I would buy anything from wallets and poker sets and clothing, and I had an eBay shop to sell it, as did my business partner. And then I'd spend my summers, probably some of my best ever work experience was spending my summers out in Marbella on the second line in the port, convincing people to buy cheap alcohol. I was, 16, 17 when I started, and I'd approach hundreds of people every single night to get them to come into the bar that we were working at. And you get very used to rejection very quickly, but you also get to understand what motivates people and understand what makes them tick, what makes them drive. Okay, well, why do they want to come into my shitty bar, right? And it was because we were offering the cheapest drinks on the port, and I'd give them some free shots with it, or you give them a free jug of cocktail. So it was, and you kind of learnt to change your script and your approach based on who I was speaking with as well. So you'd speak very differently to a group of lads as you would a group of older women, they'd want different things. So yeah, that experience was really, really great. And also was working with my business partner then as well, which was, we learned how to work together, and I think it probably stood us in good stead for later life as well.
And you're academic as well, kind of choosing to go and study maths at university, is no mean feat.
Yeah. I was blessed with brains. Both my parents were entrepreneurs in their own right. They had small local businesses in Manchester. My dad, a law firm, my mum, a travel agency business. My dad's very academic, and my mum's very street smart. And actually merging the two, I think I was blessed, and I'm very grateful for that. And I think blessed with a natural tendency towards academia helped. So it meant that I didn't really have to work very hard. So I kind of was able to enjoy school for being sociable and having fun and being a bit, silly and playing sports and those good things. And then when it came to, okay, it's exam time now, I could turn it on and I could do what I needed to do to pass the exams, to do maths and further maths and those good things at A-levels to then get me in to do maths at university. So it was kind of doing what I needed to do to get the job done rather than, I wasn't that guy who was studious and he was sat in his room revising and, I was on MSN Messenger playing Minesweeper.
FIFA and trying to import wallets from China and then
Correct.
make a turn on them.
Yeah.
So bringing the story back up, RBS, corporate life, got in, but that wasn't for you.
Yeah.
And then that's where the kind of the property itch came in. And you kind of explored that further just in terms of the properties in Manchester.
Yeah, I don't think I ever really wanted to go into the banking thing, but I think it was like, it pays very well, right? They were paying me $1,000 a week. And I was 21. And it was London 2012 and I got to spend the summer here and it was an amazing experience. But I think very quickly I learned that, this wasn't the right environment for me. It was like being a year 7 back at school and I wasn't that guy. I loved my independence. I loved my freedom. So it wasn't the right place for me. And then knowing that I wanted to go into something a bit more niche, wanted to use my personal skills, wanted to use my number skills, my ability to sell. And then, a chance conversation over, I think it was over some fish and chips back where I lived in South Manchester.
And was that with David?
So the initial conversation was with a different school friend from primary school who had this idea. And then ultimately a few months later decided to go back and work. His dad thought it was best to go and work back in the family business. So we parted, we never really joined ways, but we were exploring things together. And then David's a year younger than I am. So David finished university and it was only natural that we were going to pick things up together because we'd had that whole experience throughout our teens and, early 20s in our summers at university and stuff. So we'd already experienced working together, so we knew that it would work well.
So to buy a property for 50 grand, you still got to stump up 12 and a half, 15 grand plus the other bits and pieces. How did you fund your first first deal?
That was from that was the poker sets, that was the wallets, that was the clothes, that was the summers in Marbella, that was the 100 nights, pretty much working straight. To fund that. So built up the money. There were periods in the first 6 to 12 months where I scraped 5 grand together from this family member and 2 or 3 grand from this family member. And that definitely helped me. Pretty early on we started working with a bridging lender. Various family members and people were like, don't work with a bridging lender. It's super high risk. You're going to lose all your money. You're going to lose everything. Well, we're like 24, 23, 24. We're like, well, we've not really got anything to lose here. We had a property. We had a tenant lined up. We knew what works needed to be done. We had a buyer lined up. So we needed the money to fund it. So we started working with together who've, gratefully have allowed us to grow our business exponentially. They as they do, they I guess took a chance on us, but also they saw that they were buying. I mean, we bought a property. I think it was Wigan or Bolton for the first deal we did with them was about 53 grand. We bought it in auction, right? So they probably lent us 75% of the cost of the property. We knew that we were buying it below market value anyway. They were giving us 75% of it. We put in the difference. And we put in the cost of the works to be done. So, you find the equity and you borrow a bit here and then you're waiting for this one to sell and the first one needs to sell before you can buy the second one. And you're upsetting a lot of agents because they're like, you told me you're going to complete for cash weeks ago and then suddenly you got bridging lender and you delayed a couple of weeks, but, ultimately it worked. And then
it's trying to spin a lot of different plates. Buy, get a tenant, do the works, and then an exit simultaneously with trying to get the next one.
We basically had an army of people. It was just the two of us, but we had an army of people working with us. Very early on, we ended up getting into bed with our solicitor, who we still work with now, a guy called Sean Daly, who's done thousands of transactions for us. And very early on, we were working with one or two sets of builders who we could trust. They were on site. We knew they'd get the job done. They'd work all night, and we needed to deliver it for the housing provider, which was Circa, who were housing asylum seekers initially.
And then they're under pressure as well in terms of like trying to get people accommodation, right?
Correct.
So there's a lot of intensity and deadlines to hit.
We need this, on that day. You said you're going to deliver it this day. Make sure that it's there. So as much as you're spinning plates, you don't want to let people down, and you're making sure, okay, is the buyer coming in? As soon as that lease is signed, you want the buyer to complete. So you've got your solicitor working with their solicitor. You've got you need the lease signed. You've got the housing provider. You've organised the date weeks in advance. This is the handover date. You better be sure that the keys are ready. And we know they're going to snag this thing, like to the extreme. And that's what was great with working with the PLC right at the beginning, because if fire doors were more than a few mil out, and weren't hung correctly and everything else, like, no, we won't take the keys off you, we won't start the lease, you can't sell the property. And we needed to sell that property to work on the next one,
to pay back the bridging lender and their return.
And that's expensive. That was costing us 1% a month. And
free up the capital to get the next project and the next project and the next project.
Yes.
So how did the business evolve then? And when you closed your first deal, was that a case of bang, we've proved the concept, it's legit, we're onto something here?
Yeah. Once we realized that you could sell a property on a yield basis rather than just a bricks and mortar basis, we would buy something. Let's say it was bricks and mortar. We try and always buy 5 to 10% below bricks and mortar, but then you're spending a significant amount on the property because you're converting it from a family home typically to a shared accommodation or something that is specific to the use of the residents that are going to be living there. So you're definitely spending more than what the bricks and mortar was. And therefore, when you assign a lease to it with an income, that then spat out a yield, and we were selling these things initially at like 11-12% plus. And we wish we could have just held on to all those years along. So you start realizing that when people start buying for a yield, suddenly there's an arbitrage to be created. There's an opaqueness in the market where I can buy a property that's on the market. I can add value through refurbishment and lease. And I can then take that to an investor, and they'll look to buy that as secure income with through real estate and with some positive social impact very early on. And then that was like, okay, well, we've got something here because we're selling on a yield basis. We always know what our exit's going to be within a few kind of percentage on the yield. So we knew straight away, we buy for this. This is what it's going to cost us. We get it priced by the builders. We can exit this. There's our margin.
Let's crack on. It's very granular though. How do you build an institutional grade or quality portfolio with, 3, 4, 5 bedroom, 50 grand houses in around Manchester?
Yeah, we didn't. Ultimately, we had to change, and it was probably around 2017. So we'd been going. I think we bought our first property in Jan of 2015, and then it was probably back end of 2017 or Jan 2018. So we're talking 3 years in, where we've been really grafting hard. We've been, buying property on the market, selling them to doctors, to platforms who, there was some property syndication platforms, property crowdfunding platforms, anyone who really wanted great secure income that we were able to deliver, nurses, doctors, that kind of thing. And suddenly we saw, I don't know where we saw, but there was something in the news where there were these social housing funds based down in London. So we decided, okay, let's get on a train, let's book in a few meetings, and let's start speaking to these social housing funds. So there were a couple at the time that were quite prominent, which were Triple Point and Civitas, and they were investing in specialist supported housing. Now, we knew nothing about specialist supported housing. We knew all about asylum seeker accommodation. We knew we had a great tenant. We knew that we had As soon as we handed the keys over, there were no issues. If there was an issue, it was very minor. They would tell us about it. The rent got paid on time. They were a great tenant. They were a PLC. Like, this was fantastic. And then we went down to the social housing funds and we like, ready to pitch them, and they're like, well, we don't want this. We want specialist supported housing. And they started almost like educating us on the model. And then we understood, actually, okay, well, they were looking to house people with more acute needs. They were looking to house people with like mental health issues or learning disabilities. So we kind of went away realizing that actually what we were doing, whilst it worked for the granular properties and the granular investors, actually there's a big market out there for people who have capital, which was amazing, and they want to part with their capital. And that was probably a big missing thing for us, that we always were chasing, where's the capital? If you're working with a doctor, yeah, I'll do 2 with you, but I've got no more money. And then you move on to the next person. Yeah, I'll do 1, 2, 3, 4 with you, but then I've got no more money.
So you were kind of just working with middle class professional people that
Yes.
had, savings, 20, 50 grand, and they were going to work with you to be the majority of the capital in that deal. You'd put a bit of co-invest in, do the deal on a fee basis and then exit it, and then return and then shop around to go and find your next capital partner.
We actually, we took all the risk actually. So we bought it, we had a bridging finance, we stabilized it and we leased it, and then we sold it.
To those individuals.
Yeah.
Fine.
And
So
they
you knew who
typically-
your exit was there.
But they had finite cash, because like you were
Quite,
saying,
yeah.
So suddenly we go to these people who have a load of cash and they want to spend it. And this is like, wow, this is fantastic.
It's a light bulb moment.
Yes, light bulb moment. And suddenly we say, okay, well, let's explore this. Let's go into specialist supported housing.
So you're 3 and a bit years in.
Yeah.
Tell me about the team at that side before you kind of went into specialist supported housing.
There's maybe myself, David, my business partner, and a couple young guys who were friends' brothers from school, friends' younger brothers. There were a couple of them, really great guys, really fun to have around. But again, they left straight from uni and they came to join us because that's all we could afford, and it was a great opportunity for them to learn and get their foot on the ladder and working for them. I think we had someone who was doing accounts. So yeah, maybe 5 of us internally.
And what were your kind of
and David and 3
annual
others.
profits or revenues at that stage?
We were doing pretty well, actually. We'd probably made a fair chunk of money. We'd probably done a lot of units. We'd probably, generated over £1 million worth of profit. By that stage, 1 or 2 million quid worth of profit, which was really great, hustling, buying, selling, just doing more. But suddenly when, I call it like the club doors were open, and there were 2 housing funds who had money, capital there, ready to spend, willing to spend, desiring to spend it. It's very different to going up to those people before and saying, oh, do you want to buy this? This is why I think you should buy this, rather than buying anything else that was in the market. There were other people offering investments at the time. So when I could go to them and say, and this is what it is, and they were like, great, I'm desperate to spend my money because then I can go and raise more.
Yeah, because they're under pressure to get out the door.
Yeah, which was great because I didn't need to convince anyone anymore. It was just about fitting their criteria. So that was a big light bulb moment. So we came back, early 2018, and we started exploring SSH. And it was just at the time when First Priority, who were an RP at the time and signing a lot of those leases, went under. So we came in right at the beginning.
So a registered provider.
A registered provider.
So someone listening to this, what is a registered provider?
So they're a registered provider of social housing. So the regulator of social housing regulates them, and they provide social housing. So they own and operate. They're regulated and allowed to own and operate social housing. This was a not-for-profit RP, registered provider, and they were delivering the housing side for specialist supported housing. Now with SSH, there is an RP and there is also a care provider. So there were these care providers who were doing great jobs managing the residents and caring for them. And the RP's responsibility was to manage the property side, the maintenance, the management. They were also responsible for collecting the rent from the local authority and then forwarding it on to the investor. And right at the beginning, this provider went bump. So as we started meeting these funds for the first time, we learned, okay, there's a lot of people in the space who are bad actors, who've already done things incorrectly. They've delivered properties that actually weren't fit for purpose. Providers have signed leases on things that weren't fit for purpose. So the big thing, at the beginning of every conversation that we had with these big institutions was, this is what's happening in the sector right now. And they're asking us a million questions, which of course we had no answers for. And we were upfront saying, listen, we're exploring this at the moment. We'll go and look at this. But the big thing that they really imparted upon us is that if you're going to do this, you need to do this properly. And I would say that a couple of years in as well, I really started witnessing and experiencing the social impact side. So I'd go to, there's a time that really sticks in my head. I went to a property with the asylum seekers in. I went to get a lease signed, and the guy came up to me. It was a guy who'd just come in from Afghanistan, and he asked me to top up his mobile phone. He'd been to the newsagents and asked me to top up his mobile phone so that he could go and make a call to his family back in Afghanistan. And suddenly you're doing something which I hadn't topped up a mobile phone since I was like, 12, 13. So it's like you're helping someone and you're realizing actually this housing for people is incredibly critical. And suddenly there was a face behind the tenants. I'd never had involvement with the tenants before. I was just always dealing with the providers, who was, someone who I could meet on the street. Whereas here, I'm now interacting with people that I wouldn't have naturally come across, and they're real humans, and you're providing real housing for real people, and they're benefiting from it, and they've got family back home. So I started really experiencing what the residents who'd be living in the properties.
And just like the impact of the work, and if you get it right,
yeah,
it would actually materially have on these people.
Totally. And it kind of all happened at the same time.
So how did you then kind of institutionalize your business to convince the capital that you were the right manager to go and deploy the capital, manage the capital, and be a kind of a partner of theirs? So
for them, they wanted high quality properties in good areas that with good care providers and good registered providers doing the housing side. So it was a case of, okay, we need to understand where's the need first. So we quickly learned. A lot of the learning was done from the funds because they wanted to spend their money. They were happy to educate us. So they said the first thing you need to do is understand where's the demand. So you go and you speak to local authority commissioners and you go and speak to care providers, and they tell you this is where there's demand. Okay, I need 6 self-contained 1-bedroom flats in Derby, for example. So we would then go out and we would source suitable property in that area. Okay, what would the rent be in that area? Well, then the fund would introduce us to the right RP because they want to commit capital. So they'll introduce you to the right partners. Okay, they've introduced you to the care provider. They've introduced you to the RP. This is what the rent will be. Okay, this is what my rent's going to be. This is what my property is going to cost me. This is any adaptations I need to make. This is my all-in costs. Okay, and what do you buy it from me when it's done? Well, we buy it like a 6% yield. Okay, so my income is this. I buy it 6% yield. I sell it for this. Okay, this is my margin. Okay, and at the time we didn't realize how many things would go wrong and how much cost overruns and everything else. So we thought the margin might have been...
Yeah, you just saw this massive pie of margin.
Yes. But for us, it was great because we went to meet these funds and we're like, we won't really do in chunks much less than kind of 5-10 million quid. And, we're like 25, 26, let's say at this point. And we're like, oh yeah. Normally we're selling property like 150 grand to one property to one investor. And suddenly they're talking about millions of pounds, 5-10 million pounds. And it's like, wow, how are we going to do this? And we kind of said, listen, we need time. We'll deliver you one, then we'll deliver you another. And we ultimately came good on our promise. And that's really what helped us all the way along, spinning all those plates, but ultimately performing for people. And that's what allowed them to our first property was maybe £600,000-700,000 that we sold for. A very small deal for them, but because they wanted to get the capital out, because we built a relationship and we delivered them the product they wanted to, they knew that we'd do more. Then
your confidence grows. That imposter syndrome that you might have felt kind of subsides.
Yes.
And actually, just given your track record of doing kind of more smaller, granular deals, you can translate that skill set to a bigger ticket and then go and source it, given the confidence that you had.
Yeah.
So the business grew through that, did it?
Yes. And then, again, one deal became 2. Then we worked with one fund, we worked with another fund, more providers, and we started doing more SSH.
And was there much competition for the stock that you were looking to buy at that time?
I think from the property side, not so much. quite quickly the institutions ran out of capital, and we started having, probably within a year or so of working with those funds, the capital dried out. I think, things like Brexit and, a lot of real estate investment trusts were trading below their NAV, their net asset value. So as a result, they couldn't raise more money. Don't know if you want to talk more into that, but they couldn't raise more money essentially because they were trading below their par value, and therefore, if they raised more money, investors would essentially be diluted at a discount to what they were in for. They couldn't raise money, so as a result, we had to start thinking about other ways to do this. So we started coming up with other solutions. That's when we started looking into how can we solve the homelessness crisis. It was about delivering, maybe rather than specialist supported housing, we started doing low-level supported housing, and there was capital out there who were interested in investing in that. Then we started looking at new build affordable housing. Okay, there's potentially some capital out there. That was a little bit more of a kind of a roll of the dice. We felt confident in it. Blackstone had just launched a platform doing it, so we thought, well, maybe we'll explore that. And it kind of came fortuitously that I decided I wanted to spend a bit more time down in London. We started building a team down in London to start working on that second strategy of, we had the supported housing strategy that always existed in one guise or another. And then we started working on new build affordable housing strategy.
So it's kind of taking the learnings, taking the experience of identifying, managing, developing, and financing and then exiting property, just applying that to a slightly different subsect of residential real estate, and trying to follow the money where the kind of institutional funds had raised it to then allocate it.
Well, we realised it was solving two problems. It was solving the problems from the local authority perspective. There's the huge demands that were set on them, and solving the institution side where they wanted to deploy the capital. And if we could sit really nicely in the middle, because you had to solve the local authority problem. It wasn't just about solving the money problem, because that would fall away. We learned that straight away at our first meetings with the institutions. You have to do this properly. So it was about understanding the needs of the local authority and the demand from a resident's perspective, and then understanding the demand from the capital perspective and lining those two things up. They didn't want to get involved in the granularity side. They didn't want to go out and buy these properties. So it was for us to go out and be the bridge between the local authorities and the institutional capital.
And the local authorities didn't have the expertise to liaise and converse with the capital.
Exactly.
So that's why you sat neatly in as a bridge between both parties.
And it's a huge bridge. It's a chasm between those two things. So, and typically local authority can be very slow moving, right? So you have to be very patient with them. And we want to be fast moving. So we're always trying to turn the cogs really quickly. Likewise with institutions, once institutions are up and running, they can be quite quick. But, I can tell you firsthand experience, if they're just getting started, they're raising their funds and everything else.
It's compliance, bureaucracy, red tape, new manager,
it takes years.
Onboarding. Yeah.
It takes years. Both of these can take years. So we have to be turning this wheel really, really quickly and doing our best to make these go as quickly as we can.
Quick one from me. If you haven't already subscribed or followed this show on the podcast or app where you listen or watch, please do. It takes 10 seconds and helps tremendously. I've got really big plans for the People, Property, Place podcast, and that one small action really, really helps grow the show and the presence and enables us to keep doing what we're doing. So if you haven't already, please follow or like on the platform you watch or listen to. Thanks so much. Talk to me, you touched on move to London. How big was the team at this particular stage? And, what was the plan and reason for moving to London? So
we'd grown quite a lot now. We were doing more specialist supported housing. We're doing some low-level supported housing stuff. We'd started working more with institutions. We understand institutional needs, bigger partners. I'd say the team at this point is, maybe up to 20 people. We grew our offices in Manchester. We bought a great office block near Piccadilly Station, and we're beginning to build what kind of HSPG is now. COVID hits, we're all locked down, and suddenly you can work from anywhere. And it was kind of September time, and I just thought, well, people aren't really in the office still. You know, we were probably going into lockdown 2 or whatever it was. Why don't I go and spend a bit of time? My friend had a spare room in London that I would stay down when I'd come down and visit the institutions. And also a lot of my friends from university and school were down in London. So I would come down maybe on a Friday and then leave on a Sunday night. I'd have my meetings with the institutions on the Friday. I'd spend my time with the friends on the weekend. But then I was like, you know what, why don't I just go down and spend a week there and see how that is? I'll work from there anyway. I've got this room that I would stay in. So I was at a festival, and I decided, I got a lift there with one friend from Manchester, and I got a lift back with a different friend to London. And I never looked back. I ended up spending 2 nights in my old bedroom where I was living on the outskirts of Manchester, because I never looked back. And then we ended up building a team here. So we started focusing on new build affordable housing, the kind of capital A affordable housing. We tried to register our own for-profit RP to be able to own and operate affordable housing. You need to be an RP. So to create one, you have to really create a for-profit one, to be able to make money.
Did you do that?
We tried. Everyone was like, it's going to be really hard, but you know, it'll take 6-12 months. And we brought in some top consultants, paid them loads of money, and top lawyers and paid them loads of money. And the regulator just didn't want us, I think. And to be fair, like, we didn't really have the experience. You know, we had a bit of experience, but like they only want to accept RPs who have, you know, the sustainability element, and they know that they're going to be there for a long time. They know they're going to be in there for the right reasons and everything else. So we started trying to do deals. We bought a small portfolio of shared ownership, to bring into the RP that we're trying to set up. And it wasn't working. So we ended up coming across an RP that was already existing. It had 6 affordable rent units. It was pretty fortuitous. And so we acquired that one.
Which is often the way. Quite a lot of people buy the RPs rather than go through kind of setting it up, because that's the short circuit or the easier way around to getting it right.
Totally. And listen, LNG have set up a load and Sage have set up a load. If you're already there and you're established, you can set up more. But the regulator, quite rightly so, don't want new entrants, because, you know, as we learned very early on in the beginning, there can be people who aren't in this for the right reasons, and the regulator is very hot on that. So, you know, when we bought the RP very early on, the regulator were like, okay, well, what are you going to do here? What's your business plan? And then that's when, you know, suddenly we realized actually we have to do this you know, well, we knew that already, but that's when we bring in the right board members to ensure that we're doing this properly, doing this compliantly, making sure it's financially viable and sustainable, making sure we're looking after our residents properly and all those good things, making sure that our capital is sustainable from sustainable sources and stuff. So we learned that very early on.
And you just wanted to control more of the ecosystem. That's why you went down that route?
Really, to be able to own and operate capital A affordable housing, you either need a partnership with an RP or you need to own an RP. And this kind of made sense for us to do that. It was a sector we wanted to go into. We felt confident that there was a gap in the market. So the likes of Sage were doing really well. They were buying at the time 50 units plus of Section 106 housing. So for those who don't know, if Taylor Wimpey or Persimmon or Barratt Homes are building 100 units in Ealing, the local authority will turn around and say, okay, 30 of them need to be affordable housing. And before you can start selling or tenanting those 70 houses, those 30 need to be sold to an RP. So that's your Section 106 basically. And we were coming in and we saying, okay, we're a new entrant to the party, 30, 40, 50 units plus, you know, the likes of Sage and other parties out there, Blackstone's platform, hoovering them up. They've got a great team. They were just buying everything.
Quantum of capital.
So we thought, well, hang about. We can come in here. We're the granular guys, right? We know how to build up granular portfolios. So we were looking at 1 units, 5 units, 10 units, you know, maybe even 18 units, maybe up to 20, 25 units. And then we were getting outbid. But what that meant is that we were able to buy this at a really attractive level at the time. Now, granted, this was a few years ago, this was before trust, before, you know, the kind of the gilts came out, and as a result, maybe the pricing it was great for the time. If I look back now, it wasn't that great pricing. We're probably buying better than that now, but of course the market's moved. So we were buying at the right price, and we felt confident that if we could fund this the right way, we were looking at attractive debt, we'd be able to hold it on our balance sheet and be able to grow the portfolio that way. So that's really how we got involved in that space. We brought in some really great people, again, very junior. It was a case of, okay, what can we understand from the funds who are doing this already? How can we do this on a whim, on a shoestring, right? So we brought in, at the time, Dan, who was our first employee in this space. He was an analyst at Sage. He'd been there, a couple of years. Very hungry guy, very honest, very trustworthy, very authentic, and keen to crack on with us. So we just started building that business together. He had a few contacts. He had great knowledge in the space, and yeah, around him we started building the team. He's still with us today, but he's now, he's a senior associate and leads deals. Well, he's basically led deals all the way through. So that's when we started building that team. And then we started having two very clear investment platforms in HSPG. One, which was the traditional supported housing platform, and the second, which then became the new build affordable housing platform. And then we started growing our asset management business, which was there to support those two businesses.
So you had the two distinct verticals, strategies that you would then finance and do deals with.
Yeah.
And then talk to me about that asset management platform you just alluded to.
So we thought a great way of being able to grow our relationship with Manchester City Council, for example, was getting on their panel for homelessness accommodation. So in 2017, we applied to become a provider of housing for Manchester City Council, and we started working with homeless families in Greater Manchester. We're buying up a lot of terrace properties in Greater Manchester anyway, and it made sense, rather than handing them out for other people to manage, why don't we manage them ourselves and build up a management book? And then we started doing some rent-to-rent stuff. So there were people out there with terrace properties who, didn't know what to do with them. They were maybe getting private tenants in there. They were wrecking the place. We said, okay, we'll guarantee your rent for 3 years, and we'll take them off your hands. So we started really understanding, okay, what does it take to be a good manager for the residents, and also what does it take to be a good manager for a landlord? So we started building up this kind of asset management, property management business, which then stood us in great stead, because fast forward a few years, then we started working with institutions, and actually we were able to then carry on asset managing on their behalf, which was great for us, gives great recurring revenue, allows us also to stay involved in the properties.
Yeah, because you'd build the portfolio and then exit to an institution and then retain the management. So you'd have that kind of recurring fee revenue, having kind of built the portfolio and really understanding the properties. Exactly,
yeah. So to kind of fill in the gap there, we didn't know what we were going to do on the new build affordable housing side. With the supported side, we always sold, but on the new build affordable, there weren't any obvious institutions. We thought maybe Sage might buy it, but we didn't really know. We started hearing murmurs of people like Gresham House and M&G started getting involved. We did a deal quite early on with Resi REIT, and then they ran out of capital. So we just thought, well, we can sell out some of our shared ownership. Maybe the affordable rent stays on our balance sheet, and we'll be able to work it out. But when we started selling it, we were like, okay, well, yeah, let's keep the management. Why not? We keep involved with the tenants. The local authorities will like it because we've already been approved by them. The tenants will like it because hopefully we're doing a great job already. It keeps us involved, keeps the institutions happy, and it's just another great revenue stream for the business to keep the lights on. If you're not doing any trades, it means that the business is more resilient.
Yeah, you're not having to do deals for the sake of doing deals just to get the fee revenue and support the team. You've actually got something a little bit more sustainable.
Yeah.
So when it is leaner, you can support the team and be disciplined in terms of your kind of investment approach.
Yeah.
How have you gone about building your team?
Now or then?
Well, just over the last few years. How have you gone about kind of attracting, retaining, developing talent?
So now we're really intentional about it. Over the last few years, I think that once that move happened, that back end of 2020, the team really started to become a more institutional team rather than it being us on a shoestring. And, we started being able to attract really, really great talent. So at the back end of that year, we brought in our now CIO, Michael Pearson, who'd set up Sage with Blackstone, and also previously set up Invitation Homes out in the US with Blackstone. Yeah. And they, people like his caliber was a great way of really just attracting more talent. So how do we go about it?
So like institutional stamp, if we're able to attract a big hitter from Blackstone to come into our business as CFO, now CIO, like if he's going to come, and you're at the caliber of shop to be able to attract someone like him, it makes it a little bit easier for others.
we brought in the right people, right? We'd learned from some of the people that we worked with, actually, we didn't want any dickheads. We wanted the right people who had the right culture. And then we started being very intentional with the culture that we created. So we started creating core behaviors in the business. We have 6 core behaviors that we're really proud of now. And they're not just there, they're not just there up on the wall and no one knows them. Like if you ask anyone in the team, like they'll know their core behaviors, and they'll be able to rank themselves between 1 and 5 on their core behaviors. And they'll also be able to tell you, this is the core behavior that I'm working on this quarter, right? So we started really being very intentional about who we were hiring. What are their core behaviors? Do they align with our core behaviors? Is there an alignment there? And then as a result, it became a bit of like a flywheel, and it's growing, it's getting better and better. So we've gotten really, really good now at hiring great people. We're really good at saying no to people who maybe on the surface and on their CV might look fantastic, but maybe they just don't fit culturally, or maybe there's just something not right there. We've learned from our mistakes. If something doesn't feel right, you don't hire them. And this is another great learning as well. If you're hiring for one role, or you meet someone and you're not hiring for a role, but you think, oh, you know what, I'll squeeze them in there, or they do this, but I'm not hiring for that role, it doesn't work out. You need to be very intentional. This is the role we're hiring for. This is the job that they're going to perform. These are the outcomes that I expect, both from the business perspective and from their perspective. These are the skills that you should have. These are the things that you should obsess over. We have a very clear mandate now. We don't just send out like a job description. It's called a role manifesto. And we're so specific with this, and we think it's a fantastic way to recruit. And I'd happily share it with you afterwards if you'd like. Because it allows us to be really intentional with who we're hiring. We don't bring someone in. Every time we've hired someone without a role manifesto, unfortunately, they've left. I don't recall one person leaving the business who I've desperately wanted to keep, and I'm very, very grateful for that. And we've got a great culture and a great camaraderie and team within the business that basically means that once you're in, and if you're loving it, we're loving it, and it's great.
The business today, am I right in saying 50 heads? Yeah. 30 in Manchester, 20 in London, give or take? Yeah. And how much capital have you deployed into the UK real estate market?
So we're about £1 billion, and we've housed 10,000 people. We've created 10,000 new homes, which is another stat that I actually prefer leading with. I think I used to prefer leading with that one, whereas now it's like I prefer the tangibility of it. I think it's all telephone numbers now. Since the last few years working down here, it's great because to solve this problem, it has to be telephone numbers. It has to be hundreds of millions and billions of pounds to make a dent in the social and affordable housing crisis that we have here. But what feels more real is being like, okay, there's 10,000 people that we've been able to house in our properties, and that feels more tangible because there's billions more that we need to raise and deploy to house thousands more.
The sector hasn't been without its fair share of press attention, quite a lot of negative press attention. What's your take on that?
I think it keeps the sector honest. I think that the bad actors have been weeded out through lack of congruence, through being exposed. I think that some people have been ignorant, which is a shame, but I think some people genuinely had bad intention and just wanted profit and didn't put the tenants, the residents, the local authorities first. I think what it's done is it's just made the sector tighter, more focused on doing good, and more really intentional with okay, what's this capital? What's it seeking? Local authorities will only work with certain people. The regulator will only work with certain people. It's just tightened up the market. And what it's meant is actually only a few players have really flourished now and are still in the space. And I'm grateful that, we're one of them. So, I think we've definitely seen a lot more capital come into the space over the last few years, which is fantastic. We've seen loads of institutions come in: CBRE Investment Management, Savills Investment Management, M&G, Octopus, PIC. All these big brand, L&G, all Blackstone, all these guys are now flooding in. And what it's doing is it's raising the bar for what needs to happen, because those guys don't want to be on the front page of the Daily Mail. You can guarantee that. So all the time, it's just flushing out the rubbish and the bad actors in the space. And it just means that it's becoming more professionalized, more institutionalized. And it means that it's a much higher bar to entry and higher barrier to entry than it was when I got in, coming up 10 yeyears ago now, when no one was really in it. It wasn't an institutional space. And we're seeing more and more capital. We're seeing overseas capital come into the space now. There's more opportunity for defined benefit scheme, pension fund, insurance fund money to come into the space, and it's only going one way, and that's fantastic, and we're grateful to be a part of that.
And I guess by nature, the sector highly ESG, especially S, social and impactful, but also financially as well, can generate some very good value add returns for kind of the capital entering the space as well.
Yeah, it's great for capitals across the spectrum. I think more and more the opportunistic capital is a little bit harder. You've got to be really run a tight machine to make opportunistic capital, but it's still out there, and we're seeing new entrants come in all the time. We're seeing more private equity, still come into the space, not as much. There's a lot of private equity out there, and I know this from firsthand, that are desperate to get into the space, and they're like, we want to get into the space. There's not enough availability to do it. How do we do it? So I do think it is that, you call it the value add, that kind of 10 to 15% capital. It's a lot more easily, to get in there than let's say the opportunistic 15 to 20% plus returns. But from a core and core plus perspective, it's fantastic. It's long term, it's inflation linked, it's positive social impact, very low voids, very low churn. It's from an institutional perspective, it's fantastic. It's a great way of institutionalizing residential real estate, especially the affordable, the new build side, because you buy a new build kit. It's affordable, which means you're renting it at a discount. Very low voids, very low churn, very low arrears. It's well managed. There's a few great managers out there. So from their perspective, it's a great way of getting exposure to the residential market here at pretty attractive yields on new build kit, and also you're renting it at a discount to market. So because it's affordable rents, LHA is on average about 76% of market rent. So you're actually able to do this at discount to market rent. And we're seeing a lot of institutions still kind of going in, they want to, rightly so, invest more into, BTR and PRS and get great returns. But rents are going up massively, right? And it can be unaffordable sometimes. So a big part of their business model might be, okay, well, we want to increase rents every year. Whereas with this, we know it's going to increase by CPI +1. But the benchmark to begin with, we're not offering, a gym and a cinema and a pool table and all those things. So the starting rent is 76% of market on average, rather than 110, 120, whatever it may be in that space. So it's a really great way of, as you said, delivering impact, but also from a core risk, a low risk perspective, it's really attractive.
How have you ensured your own professional development has been taken care of, having not worked in a big corporate or had the structure of an institution to kind of develop you from a personal perspective? How have you ensured yourself as a leader that has gone from kind of scrapping around Manchester, sourcing, structuring and putting deals together, to running a business with 50 people or so? How have you been able to grow personally to be able to facilitate the growth of your company?
So there's a few really key ways, I would say. I think firstly, an active interest and partaking in spirituality and conscious activities, be it yoga, mindfulness, meditation, breath work. personal development in those ways, reading books, listening to podcasts such as these have been hugely influential for me. Had a great opportunity to go and study out in the US. I did an executive MBA course at Harvard Business School that completely reframed the way that I thought about leading and growing a business. Not about rather than telling people this is how it should be done, it's about actually understanding what's the right questions. How can I be asking the right questions? And I think that's probably also why we're able to generate and attract really good talent, because it wasn't us sitting at the top, or speak personally, it wasn't me sitting at the top saying this is what you need to do. It's me asking the people who I've brought in, how should we do this? Okay, why are we doing it like that? Okay, let me ask one more question. Let's ask another question. Let's get to the root of this. It wasn't, when I was at Harvard, there was no whiteboard, this is the question, this is the answer. There was no right answer. Getting to the answer was through the correct questioning, was how can we ask the right questions to understand the problem in further detail, and then take this into an area that we never thought we might go to. So experiences like that were great. I also did a real estate finance and development course at MIT out in Boston as well. That was linked to the first course, which was also fantastic. It really allowed me to understand from a macro perspective, from an institutional perspective. I started understanding waterfalls and promotes and private equity and all those good things, which I was then able to then have a basic knowledge and understanding that I could then bring back. And when I'm having conversations, it just gave me a bit of an edge. Also, just really asking good questions and listening. I would go into meetings, especially in the early days with those big institutions in 2018. I'd ask them so many questions. I'd write it all down. And then I'd go and meet the next fund the next day. And I would regurgitate what the fund manager had told me the day before to these guys. And they're like, oh, these guys kind of know what they're doing there. They know what they're talking about. I just listened really well. I'd record the meetings and I would listen back. How did they speak? What did they say? What was important? What went well? What didn't? The same way as when I was going up to people at 16 on the street in Spain, what worked well to bring them into the bar? What didn't? Okay, what can I say next time? And I would write it down and I would then regurgitate that to the next people. So it was a case of iterating and just becoming an amalgamation of all my experiences so far to become to who I am today.
Where do you see kind of the business going 2025 and beyond, as we kind of take a step forward now?
So we're at a really interesting place. The market's buoyant again. People want to spend money. There's a lot more stability in the market. A lot more institutional capital has come in. So for me, it's about making good on promises to the institutions, making sure that we're doing our job well with the local authorities, making sure we're doing our job well with the house builders that we're buying off. So again, being that center of the spider's web and doing a great job for everyone, and then essentially being able to deploy more. We are doing a lot more new build affordable housing. We're a Homes England partner, so we're able to bring in grant funding. We're able to do additionality, take private units, convert them to affordable using Homes England grant, which is fantastic. We're drawing down a lot of grant money at the moment, which is going really, really well. And then on the supported housing side, we've refined the model. Again, we keep refining the model. We're focusing now on London. There's a huge homelessness crisis that we're focused on solving here in London. So we've been working on a project called Project Westminster. It's almost a year ago now, actually. Over Christmas, there were 2,000 people, Christmas, New Year, sleeping rough in the borough of Westminster alone. So we said, well, in 3 years, can we create 2,000 new homes for people and in London and call it Project Westminster, which is, for me, it's a huge failing of our society that there are people still rough sleeping. So can we, in honor of that, can we create 2,000 new homes? So we're well on our way now. We're a good few hundred deep, and we are raising capital all the time from an exit perspective and also from a ramp up perspective to be able to deliver that. So again, it's just about having the right team in place to be able to acquire this properly, make sure it's done to a high spec, make sure that it's managed properly, make sure the local authorities are on board. It's everything's being done as it should be, and then working with the capital to make sure we're reporting it on the best way. And really that's that's kind of the growth for the next few years on the social affordable housing side. We're always looking at new platforms. We're always thinking of new and innovative ways to create impact and on the social affordable housing, and we'll continue to do that.
There's a number of businesses that have set up in the last year, 18 months or so. As someone who is kind of approaching 10 years of running your own business, what advice would you give to someone who is earlier on in the journey?
Start, just get going, get on the wheel. Like, appreciate you're going to be making mistakes. If you're not making mistakes, like you're doing it wrong. The big thing you need to do is make mistakes really quickly, fall forward. Don't like rest on, oh, we made that huge mistake. Like that's great, because now you're not going to make that again. But if you're going to make the mistake, don't wait and then be like, oh, I'm not sure. Like, you kind of know when it's going down the wrong direction. You know it's going down the wrong direction. Just pull it, move on to another train track, and then go down that train track. And then if you need to move again, you need to iterate again. But just get started, know when you're moving wrong, and have the humility to be like, okay, this isn't working for me. And then when you see something that is working, like, be happy to jump on that. And always just make sure that you deliver. Like, when you're young or when you're just starting up, the most important thing that you can do is deliver for the people that you're working with, because if you don't, like, they won't work with you again. And those early adopters are your first people, your who you start with, and they will hopefully be the people that you continue to work with. But if you lose your early adopters, you then got to find some more, and it'll be a pain in the ass.
When this goes up, this won't be the first YouTube video that features you on that platform. Outside of work, what do you do to de-stress other than kind of yoga and breath work and things you touched on?
So creativity is a huge way that I'm able to be the best person for my role at HSPG. Thinking of creative ways to grow the business and to strategize and to raise capital and to work on the team. So a big creative outlet of mine is music. So I'm a singer-songwriter, play the guitar and I sing, and I've released some really great music that I'm very proud of, and I'm going to be releasing more next year. And it's a hobby that I really, really enjoy. I get to meet incredible people. I get to hang out with some amazingly talented people who I feel like I don't even deserve to hang out with them. They are so talented. I just laugh and giggle, and I'm blown away with some of the people who I get to work with, whether it be producers, mentors, or people who I just jam with. And it's really, really great to come in at the, and at the bottom, and every day is at the bottom when you're surrounded by these people, because they're so talented. And I just enjoy the creativity, and I enjoy giving in that way. So yeah, and really, really enjoying the music and excited for more. To do more there.
Did you think when you set the business up nearly 10 years ago, you would be where you are today?
I didn't think it would have the longevity. I was at that mindset at the time where make a quick buck. Everything was always, okay, last minute, get my exams done last minute, and then move on. So I thought it was like, yeah, we do a few deals, then we part our ways, and then we kind of do something else and everything else. Now only through... because it had to be done properly, I couldn't do that. Because if you try and make a quick buck, then you couldn't be successful. You had to be in it for the long term, to make a difference and to do things right. Otherwise, you wouldn't do it correctly and you wouldn't make the money. So, and don't get me wrong, people made a quick buck and they left and whatever, but it was very clear that if I was going to do this properly, I never want to do anything not properly, right? I want to do it properly, but then I wanted to move on. I like new, shiny, exciting things. I'm very creative. Like, it excites me to do new things. But I've just been able to channel my desire for newness and into this space, into this baby. So no, I definitely was not expecting to be sat here now, 10 years on.
It's that kind of go slow to go fast kind of mentality, right? And actually slowing down, building the infrastructure and the blocks, kind of ramp up and is growing your business far faster than it probably would have been if you were busy still running around, scrapping around, trying to engineer and manufacture deals. Guy, as we draw to a close, the question that I ask everyone on the podcast is, if I gave you £500 million worth of capital, who are the people, what property, and which place would you deploy that capital?
I would probably go back right to the roots. So I would go back to street property as we started across the country, probably in the north, the Midlands, and the people I would do would be the team that we have now. We've got a phenomenal team, we're set up to do granular assets. And yet I'd buy street property across the country. I would let it to, key workers. I'd make it low A affordable. I think it's a great opportunity. I'm surprised that not really that many people are doing it out there. Maybe we'll get into it at some point in 2025 in a more institutional way.
Well, a more institutional way with high quality, with people doing the right things. I guess a rising tide raises all boats. So thank you so much for coming in, sharing a little bit about your background story, breaking down some of the nuances of the sector and the opportunities as well. And I'm really excited to see what you and the team go on to do 2025 and beyond. Thanks for listening to this week's episode of the People, Property, Place podcast. If you found it insightful, feel free to share it with a friend or colleague. Give us a rating, like, or comment. It helps tremendously. It'd be great to hear from you on LinkedIn. I'm super open-minded to recommendations of guests that we should have on the show or areas of the market we should explore further. So do drop me a message. The People, Property, Place podcast is powered by Rockborn. The team recruit leadership and future leadership hires for real estate owners, funds, investors, and developers. So if you're looking to hire top talent for your business, head over to the website www.rockborn.com, where you'll be able to find a wealth of information, or feel free to drop me a message on LinkedIn. Have a great day wherever you are, and I look forward to catching you